Thank you for making clear the concepts of tax evasion, tax avoidance vis-a-vis tax planning. So tax evasion is completely a no-no affair, whereas tax avoidance should not be encouraged, but tax planning is a good way to minimize the things. So the process of tax planning can started from the very beginning. Even when a new business unit is set up, before setting up or selecting the location, etc., the entrepreneur or the promoters can think for the tax planning. Can you highlight some of the issues in this, that how a business firm or an entrepreneur or an SSC can think for tax planning in the beginning of setting up of a business?
Definitely, sir. For tax planning with reference to setting up of new business, you have to consider three main things. One is the location of the new business, second is the nature of the new business, and form of organization of the new business. So let's begin with understanding the different aspects of the location of a new business and how can an entrepreneur plan his tax to minimize his tax liability while considering the location of a new business. Many factors affect the location of a new business. Now, for example, under section 10AA, tax incentives are available in case of a newly established SEZ or section 80ID in respect of profit and gains of hotels and convention centers in NCR areas, or there is section 80IE in respect of profit and gains in certain undertakings in the northeast states. Therefore, these sections are made specially in regard to the location or area of where the new business is started. Therefore, location is an important criteria for understanding the tax planning for a new business which is to be set up. Next, we will talk about the nature of business. Here there are different sections which are given in law. Let's begin with them. Under nature of business, first section that we will learn about is section 32AD. Section 32AD is for investment allowance in backward area in Andhra Pradesh, Bihar, Telangana or West Bengal. To avail this section, the assessee has to be a company or it can be any person. Also, the assessee should set up the undertaking for production of any article or thing on or after April 1, 2015. Now, such undertaking must be set up in the given backward areas. Also, he should acquire and install new asset after March 31, 2015, but before April 1, 2020. If all these conditions are satisfied under section 32AD, then reduction of 15% of the cost of the new asset will be available. Next section that you have to consider under nature of business is section 33AB. This is for tea, coffee and rubber development account. Now, who is this assessee who can claim deduction under 33AB? Any assessee who is engaged in tea, coffee or rubber plantation can avail 33AB. He has to make a deposit in the special account. Now, this deposit should be made within the time limit of 6 months from the end of the previous year or before the due date of furnishing of return, whichever is earlier. If he fulfills all these conditions, then the assessee can take a deduction of a sum equal to amount deposited in the special account or 40% of the profit from such business before making any deduction under this section or before adjusting any brought forward losses under section 72, whichever is lower. Therefore, what is this section saying? If all the conditions are fulfilled, then the assessee can claim deduction of the amount deposited in the account or 40% of the profit before taking any deduction, whichever is lower. Next section is 35ABB, which talks about telecom license fees. This section says that the expenditure done for telecom license fees should be capital in nature and then only will the deduction be allowed. Also, it should be incurred for any right to operate telecommunication services. This expenditure which is incurred should be incurred either before the commencement of the business or thereafter at any time during the previous year. If all these conditions are fulfilled, then the amount of deduction is allowed in equal installments over the period starting from the year in which such payment has been made and ending in the year in which the license comes to an end. So, this was all about section 35 ABB. Next, we will move on to section 44 AD. 44 AD is presumptive taxation. It talks about computing business profits on presumptive basis. It is applicable for resident individual, resident HUF or resident partnership firms. It is for assessee who is engaged in any business except any person carrying on any profession or any person earning income in the nature of commission or brokerage, or any person carrying on any agency business, or any person who is in the business of plying, hiring or leasing of goods carriage. Therefore, these 4 types of people cannot claim any computation of business profits under section 44 AD. Now, other conditions that has to be satisfied in order to avail 44 AD is that the total turnover or gross receipts should not exceed rupees 2 crore. If this is fulfilled, then the income will be presumed to be 8% of the gross receipts or turnover, and it will be assumed as if all the deductions under section 30 to 38 including depreciation have already been allowed. Another section that we are going to do is 44 ADA, which is another presumptive basis section which talks about an assessee who is a resident and engaged in any profession such as legal, medical, engineering or architecture, or that of accountancy or technical consultancy or interior decorator. So, these people can only claim deduction under section 44 ADA. What does it say? It says that the gross receipts should not exceed 50 lakh of the assessee. If all the conditions are fulfilled, then income under section 44 AD will be equal to 50% of the total gross receipts, and all the deductions under section 30 to 38 will be deemed to have already been allowed. So, section 44 AD is also simple. Next section that we move to, which is the last section under nature of business, is section 44 AE, which talks about transport operators. It says that the taxpayer can be any person, resident or non-resident, but should be engaged in the business of plying, hiring or leasing goods carriage. Also, he should own not more than 10 goods carriage at any time during the previous year. If all these conditions are satisfied, then the income of each goods carriage will be 7,500 for every month or part of the month during which the assessee owns the carriage. Here an important thing to note is that the income will be 7,500 for every month or any part of the month. That means if the assessee owns the goods carriage for even one day of a month, it will be assumed that the income will be 7,500 for that month also. Also, all deductions from section 30 to 38 will be deemed to have already been allowed. Therefore, section 44 AE is also a presumptive taxation section. So, with this we are done with the nature of business. Last thing to take into consideration with reference to setting up of a new business is the form of organization. So, one has to choose whether sole proprietorship is better alternative or a firm or a company is better by checking the applicable tax rate, MAT, dividend tax, tax treatment in the hands of the shareholders or partners, interest on capital to partners or shareholders, loan to partners or shareholders, etc. So, all these factors have to be considered before choosing the form of organization. So, with this we have covered all the tax planning considerations like nature of business, form of organization and location that have to be kept in mind with reference to setting up of a new business.